everyone, and welcome back to another Chasing Unleashed podcast. I am extremely excited today about our guest, Doug Peterson. I've known Doug now. Doug, I may mess this up, but I think we're going back 4 or 5 years now, I believe, when to the first time we met, and I think this is Doug's at least third, maybe fourth time I've interviewed him on a podcast. Doug, I don't know if you have a podcast yet, but I think you owe me. At some point, I got the lead. But I really love talking to Doug, and what I'll say in advance is I before I ask Doug to tell a little bit more about himself, I can tell you that Barb, my wife, and I have utilized Doug's services, have benefited from Doug's services, and Doug will be happy to know are still using the tools that Doug helped us out with, to the point that more than any time in my life, I actually have an idea of what's going on in my financial life, which is tremendous. And so I have Doug to thank for that. So Doug, as I introduce you, I'll say thank you from the Weedin family. We have really benefited from your help and the tools and resources that you've given us, and we are better off for it. So thank you. Doug, tell everybody a little bit about you and your business and what you do.
Just a little bit of background. I did executive coaching for 20 years, and I hit a point in my life where I wanted to make a bigger difference in people's lives. So I thought about what's a huge problem, and actually what's been a problem for me. I've been self-employed most of my life, and it was money. When things are going good, you don't really think about it. And when things are going bad, you think, boy, there's got to be somebody else better in charge. And what am I going to do with this next surprise or emergency? And also, we never fought about money, but we weren't on the same page, my wife and I. So what I decided to do was to uh, really help people understand. I finally got control of it in 2014. And in 2018, I started Get Priorities Straight to help people decide where their money goes before they spend it, to get on the same page with their spouse, to get out of debt quicker, and really begin to save money that they have for all the infrequent expenses that come up. That's just 20 to 25% of our income. So that's primarily what I'm doing. And I also work with people on getting inheritances and settlements and people going through the divorce process.
And I want to talk a little bit more about that, but I'm going to jump on really the first part of it and emphasize something that I think is important. People might be watching or listening and thinking that you are a financial advisor. You're not. You're not helping them with investments or things like that. You're really helping with what everybody has on a day-to-day basis. I'm bringing in money one way or another. Somebody's making revenue. Maybe it's a dual income. Who knows what it is? But X amount of money's coming in. X amount of money is going out. We're talking about the everyday living and budgeting. And really, I'm going to call out myself. We did a really poor job of that pre Doug Peterson. We thought we kind of knew where money was going, but as you mentioned with your wife originally, we never really talked about it in the way that we do now. You're not a financial advisor. You are really a budget advisor, an expert in personal budgeting, correct?
Well, I'll make a little caveat to that. The
Okay.
actual definition of budget is a projection.
Mm.
We're budgeting for the year. And what I do is a spending plan. You can only
Ah.
allocate money that you have. And when you run out of money, you can't fund that vacation in 6 months if you don't have enough money for it. So it's really helping people create a spending plan, which creates some scarcity because you're really trying to cover everything on a monthly basis.
Yeah, spending
Um,
plan is more fun than budgeting. I think budgeting sounds like dieting. I think spending plan sounds a lot better.
yeah, and nobody goes on a dream vacation and says money well budgeted. They say money well spent. So on my website, I say nobody wants to budget, everybody wants to spend smarter.
So, okay, now I'm going to ask you to be a psychologist. What is it about us? And I'll just use, anybody in North America perhaps, but especially in the United States. What is it about us from maybe human wise that keeps us, because this would seem to make sense, right? This would seem that everybody should do this. What keeps us from doing it?
Well, often people sit down and they figure out where they stand and where their money is going, and then they do it one time. And they really, in a month or 2 months, other stuff's happened. And if you ever tried to budget before, which I had tried, it didn't work. I was off and I didn't really know how to manage it. And we're just not taught how to manage it. Now, the other side is that the financial industry has gotten really good at hiding our expenses, whether it's Venmo or Amazon just comes through as Amazon on our card. But even worse, the credit card companies keep people stuck. If you're paying the balance off on the due date for the statement balance, you're paying for stuff about 25 to 55 days ago. So you're already living on next month's paycheck. And that's hard to get ahead on. So I really think the biggest problem is people don't have a good understanding of a system that works. Um, you mentioned I'm not a financial advisor. One of my guys and you mentioned also that you kept using it, which is great because I really encourage people to think of this as a lifelong habit because you'll get so much more benefit out of it each year. But I was talking to another financial planner, a friend of mine, and I said, gosh, it really bothers me that people just kind of quit sometimes after I work with them and they've paid good money. And he said, Doug, we're swim instructors, not lifeguards. We can't save you. You don't need saving, but if you want to learn to swim, it works 100% of the time.
One of the things that I remember, and I'm going to bring up some questions again that people may not have heard you the first couple times I've talked to you. But one of the things that I think is an important factor is oftentimes I think we get stuck in the mindset of this is an income issue as opposed to an expense issue. We're not talking about people who are struggling to earn money. In fact, sometimes it's the opposite may be true, that you might be making so much money that it feels like you can spend more. Talk a little bit about that concept. This isn't about lack of income. It's really about lack of understanding, isn't it?
Well, it is this lack of awareness
Yeah.
of where all your money is going and how much is going out. Infrequent expenses typically are 20 to 25% of your income, of your spending. And a lot of people don't realize that. They say, a car expense was a surprise. They're not a surprise. They cost about 2,000 a year. Cars are expensive just to maintain. So a lot of people are making really good money and they're saying, I don't have any left at the end of the year. What's going on? I make a great income. And things are just getting more and more expensive. And we live in a really expensive area. Um, so that's what I'm running into. Yeah, just to give you an idea, I had one client, and I didn't succeed with this client, by the way, who wanted to get their spending down to $41,000 a month.
What?
And it was at $53,000 a month. So, some of this stuff we just can't really fathom, most of us.
Yeah.
Um, but it's not just people that are tight. Now, the only problem I really can't help people that are paycheck to paycheck that are just barely holding on because they can't save money for infrequent expenses. They're just
Yeah.
fighting fires.
Right. Right. What what is maybe the biggest misconception that you found in your experience that people have over creating a personal spending plan?
Well, I think creating and maintaining it, I think it's a lot of work. And one of the things I have on my intake form is how much time do you spend paying bills and managing your money and planning? And then I write how much time do you spend worrying about it? And often the worrying about it is anywhere from 4 to 10 hours or more, or all the time. And it's just not that difficult. The idea is to dial it in so it's a routine and it's efficient so that it isn't a lot of work. And I think that's the biggest concern is, boy, this is going to be a lot of work. Actually tracking my spending, oh, that's so much work. And it really isn't.
Yeah. A lot of people watching this might be, as I am, an entrepreneur, and sometimes our income and revenue is not exactly the same every month, right? You chuckle because you're in the same boat. Talk a little bit about that. So if you have somebody who, let's say, is an employee and you have a dual income and they know exactly what their revenue every month is, sometimes, especially the solo entrepreneur, that balancing act's a little bit different. Can you talk about how you've helped people in that scenario?
Yeah, whether it's a solo entrepreneur or a realtor, which is pretty much
Yeah,
on their own anyway,
right.
or a personal injury attorney, we've worked with four of those. They get larger payouts. And it's funny how people say, "Oh, I'm not making enough money to actually put together a plan." But you have expenses already. You have plenty of expenses. So someone that's has infrequent income, we want to figure out what's it cost you to live, not just to survive, but to have a reasonable lifestyle. It's probably not everything you want, but it's enough. And then we need to build up a runway. We need to build up 3 to 6 months worth of cash so that you can survive.
Yeah.
And in realtors' cases, sometimes it's 9 months to build up. And that's hard for people because they think they're used to checkbook budgeting. Well, we got a lot of money in the bank, so we can spend it.
Right, right. So speaking of that, it's a perfect segue, Doug. I've timed this out to record and to publish at the end of October, not to scare people that Halloween is coming up, but to more think about, hey, the holiday season is almost upon us. As you know, there's a great amount of spending during the holiday season, and including because I've got done with a couple, charitable auctions that come up and things like that. And so all of a sudden you hit the end of the year and now comes, maybe, and I would say this, speak to the people who have not been budgeting, what they can think about maybe preliminarily about end of year spending and how to really get dialed into making 2026 a personal spending year or a personal spending time for them.
Well, it's a little hard if they haven't been doing any planning at all because often people put things on credit cards and then they have to pay it off. And they just figured, well, tis the season, so I'll do that. They're just not in a habit of having cash Christmases or cash vacations. So one of the things that I recommend people do is keep track of all your expenses for Christmas. You could start this year, but look at everything. We're having a big party. We're going to buy more food, more alcohol, more decorations. We're going to bake a bunch of stuff for a lot of people, and actually total that up because it's kind of like going on vacation. It isn't just your lodging and airfare. You got a lot more expenses. Everything from parking to coffee at the airport. And so
Right.
I think it's really good to just know what the total cost is. And then next year, you can start divided by 12 and just start setting aside that much each month. Now, I use a product software called YNAB, which makes
Mhm.
it easy to use. And it's basically like electronic envelopes. You're just assigning money and it's that job. You give every dollar a job. So I think that's probably the biggest thing you could do is really track what this year is so you have a baseline and understand what you want to do for next year.
So yeah, I think, and I use YNAB. You need a budget. I've really liked it. One of the things that we did, and we had planned for it, was our daughter got married in September, and we offered, of course, to help. And so we had a budget. We kind of went through this. Doug, you taught us well. And what we did is we set up all of the expenses. We created a line item for it. So when it was spent, it went under that expense report. So regardless of the credit card, we use credit cards because we want to get miles and we want to get points and all of that. Well, it went under that. And then when the time came to pay the piper, we used the money that we'd allocated into that. So we knew exactly, it was easy to go in and hit a report and say, okay, here's exactly what it costs. Here's exactly what the credit cards were. Here's the money. We pay the bill. And I'm just telling you, it was really stress-free from that perspective. So I can't emphasize that enough, how important that is. Um,
Well,
you
the
know,
key to that is you're only spending money you have.
right.
can't allocate money you don't have. And one of the things that YNAB does well is it sets aside anything that you use a credit card on, it sets it aside to pay the credit card bill. So, for example, you go to the grocery store, you buy $100 worth of groceries with your debit card, it takes it out of your checking account. But if you use a credit card, it sets it in a column for payment for the credit card. So you can
Yeah.
always pay it off anytime you want.
Right, right. And I think, like you said, and I think I can't, I can't emphasize enough the reduction of stress in that. I think really one of the greatest values that you help people with is really setting up something where that because financial stress is hard, it really is debilitating and setting that up. So let's just say this. Let's use this as an example. Somebody is listening and says, "Okay, Doug, I'm in." And I've seen you write about this. So let's just say you're in. Give a maybe a 3 or 4 step process to say, "Okay, it's October of 2025. What are the first few things that you need to do in order to create that spending plan and set up the disciplines around it to make it easy?"
Now, are you assuming this is a client of mine?
This is, well, yeah, let's just say hey, let's just do this. It's my podcast. I can do whatever we want. You have a brand new client.
Yeah.
Let's say they've called you and said, Doug, I can't, I've tried to do it on my own. I can't. What do I do?
Well, first thing I do is find out what your goals and challenges and issues are around money. Whether it's a communication thing or debt or overspending or just, getting tired of the stress or not knowing where we are. Those are most common things. And then we go through a discovery process where I look at your income and net worth so I can get a picture of what we can do. I've done a lot of work with debt restructuring with people, and that's been a big help. And then from there, the third step is I go to what I call the blitz, and it's a totally different set of skills to set up something as to use it. It's like setting up QuickBooks versus just entering transactions. So I get it set up for people very quickly within the first week and a half, so then they can practice using it. And then now it's just a matter of awareness. We go back and usually download a month's of information behind and categorize all that so you have a little bit of a clue of where the money's going. And that's when things start changing. People realize, wow, now that I'm aware of it, I wouldn't spend that much on that,
Yeah,
but I wasn't aware of it before.
right.
So those are kind of the steps, if that makes sense. And then
Yeah,
it's just practice, to get good at it because we don't learn things in one sitting.
yeah,
We're
yeah.
not going to implement them.
So I'll share a little of my experience, and then I want to move on and talk a little bit about some of the other things you're doing. But this is what you helped us to understand, and I know you don't necessarily tell this to everybody, but I love that YNAB downloads all of it, all of my spending from all of the bank accounts and credit cards automatically. So I don't have to log them in. I go in on a weekly basis every Monday, and I don't have that much to check because they've all been automatically uploaded. I'm just checking for categories. Amazon's the worst, by the way, especially when you're buying stuff for a wedding. I have to go back on Amazon and find out, was it pet expense or was something, because they don't do a very good job of that unless you have something that you can figure out on that. I'd love to hear it. But really, the thought is that it's not that difficult once you get it going. And for me, it was once a week. The other thing I'll mention, and you can talk to this if you like, I actually went a little bit deeper than when we first started working to create net worth. And what I did is I made sure to go in and input my mortgage, what the balance was, and what the house value. This is what I didn't do, what the value of the house was. So I input all of the assets as well, so that very simply I could go in and get an up-to-date net worth because I not only had the mortgage in there, but I also had what the equity in the house is. So I don't know if that's something that you can speak to a little bit, but it really is helpful.
Yeah, well, you can do that, and it's fine to do that, but most people don't make changes on their mortgages on a daily or monthly basis. So, and those are all on your statements and they're all online. if you want to figure it out. But I try to keep it as simple as
Yep.
possible. And to answer your Amazon question, if you'll go into a transaction that was downloaded as Amazon, you'll see a thing that says open Amazon order history
Yep.
right within the app, and it'll take you right there. So you don't have to log in separately or anything. So that's
Right,
been
right.
really
But
great
it's an
for
extra step. It's an extra step because it downloads to the last category. At least for me, I had, and it might not be the actual category. So I've got to. If you do as Amazon as much, excuse me, as the allergies pop up a little bit. So I want to make a transition to one last topic, and it's one that as we're about to get started on the podcast, you mentioned you're doing more of, and I'd like to examine that. You have been hired by clients to talk about inherit large lumps of money, sums of money they got either through an inheritance or a settlement. Can you talk a little bit about the importance of all of a sudden having a significant amount of money now in your possession? We've heard all of the horror stories about people who win the lottery, and the next thing you know, they have no money. Talk a little bit about that work you're doing.
well, the sudden wealth syndrome is a real thing. And what typically happens is that people increase their lifestyle. They may buy a bigger house, new cars. They may feel pressured from family members or friends because they just got a bunch of money and they should loan it to them. They hear about ground floor opportunities of startups and don't make good investment decisions. Um, and often there's really conflicts between partners, married couples that, what should we do with this? So by getting really clear on what your cost of living is, what your spending is, and talking about what your values and goals are, it's really sad that people blow through it so quickly. 70% of mortgages, or excuse me, of inheritances are gone within the first 5 years. And when it comes to
You know
settlement,
what? I want you to repeat that. Say that again, Doug.
70% of inheritances are gone in the first 5 years.
Wow.
So people go through them and it's understandable. Hey, we can put on the addition to our house and we can buy a car and we can go on a trip. But we also, especially when you get to our ages, you kind of look, we ought to be saving something here for retirement. We'd
Yeah.
like to someday. And time is on your side if you get this when you're younger because it can really grow. So I'm not suggesting you don't do anything to treat yourself, but think about the whole picture and what it could mean. In some cases, it could mean that you're financially free at 50 years old by just your investments growing.
Yeah.
And at that point, what I think people want more than retirement is choice. I want to
Hmm.
be able to work if I want. I want to be able to change my job or make money or not make money. But we want choice more than just anything because retirement's kind of a vague thing. What am I going to do? Sit around, play golf?
Right. Well,
But
yeah. First of all, you can sit around and play golf.
oh,
You're
I
talking the
just
wrong
hit
guy there. I could play
I just
golf
hit the
every day.
magic word, right?
That's right. That's my prior. You remember Brad Berger, my co-host from the Shrimp Tank days, who's a financial advisor. He once said in a podcast, "Well, you can't go play golf every day." And I said, "Wait a second. What does that mean?" Of course you can. I could do that, but I think your point is well taken. It's a choice issue, and really, whether you gain an inheritance or not. But let's just talk in this case. You gain some sort of inheritance or a settlement, really being very intentional and thoughtful about what that means up front. Because yeah, especially in an inheritance, you may say, "Hey, look, we haven't taken a vacation. Let's use X amount for that and do it." But that's got to be planned and thought out and as part of the overall picture. Doug, as we start to wind down, before I ask you to
Well,
tell people how to get a
there's
home.
one
Oh, go
one
ahead,
more
Doug.
one
Sorry.
more piece to that. Excuse me.
Sure.
Um, it's the other piece is to have people that are passing on the wealth. We're having the largest amount of wealth being passed on
Mm,
from the baby boomer generation to the next generations, and having some conversation about what they've learned, how they got there, mistakes they've made between the first generation and the second generation. Hopefully, pass on some wisdom and some help in getting inheritances. So few people talk about money
Yeah.
between generations. So that's another piece.
I'm glad you brought that up. That's really valuable advice. You don't learn it in school, right? It's not something you're learning in school, and the ability, actually, it's a great legacy opportunity to do that as well. Thank you for bringing that up. Before we dive into how people can reach you, if you had one message, if this was the only thing, the only part of the entire podcast somebody is listening to, what would be your overarching message to people around personal spending and how they can, in today's society where we are being bombarded with the ability to spend, what is the one piece of advice you might have for them?
Well, we hear a lot about maybe we're spending too much or we can't afford it. And those are both opinions. If you actually track your expenses and decide where your money is going to go first, the conversation changes to, well, what do we take it out of? And it's takes all the emotion out of it. And I think that's one of the biggest things because money stress between couples, stuff is just left hanging. We can't afford it, and there's nothing else. But if you look at it and say, what do we want to take it out of? And there's nothing we want to take it out of, well, we don't want it that bad. We want other things more.
Yeah,
And that's
yeah.
really helped.
Good. Well, like I said, everybody listening or watching, I'm a big Doug Peterson and Get Priorities Straight fan. He's made a great difference for us, and I'm grateful to him. Doug, tell those people out there who are listening or watching how they can get in touch with you.
Well, my companies Get Priorities Straight, but that's a little too much to write down. So if you just go to meetwithdoug.com, that'll take you to my calendar. It'll show my website, it'll show my email, it'll show phone number. And also, I'm more than happy to talk to anybody in a confidential, complimentary 25-minute meeting if you have other questions.
Okay. And I'll have that all in the show notes. Doug, it's been great to catch up with you. We need to do it a little bit more often. Wishing you and your family a fantastic last few months of the year. Take care, be well, and thank you for joining us here today. Everybody else, thanks for watching or for listening. As always, please subscribe, give us your likes, give us your comments. Love to hear from you and what you thought of today's show. Until next time, be safe, be well, track that personal spending. But for now, we'll say goodbye. Take care and so long.